Hello everyone, welcome to my YouTube channel. André Cardoso here. Thank you very much for being here as always. For those who are here for the first time, I hope you enjoy this session. I tend to search for advanced pattern formations inside the market, and for today I want to share specific content with you, a bit different than the usual Forex patterns that I used to share here in the commodities as usual. For today I want to share some of my insights for some of the stocks and obviously taking into consideration the most recent variables and ratios and the eventual projections for those patterns to form. So basically I will cover my red list and my green list with a few stocks. Obviously my objective is to try to offer you kind of a methodology that we can use to identify and to project those patterns and try to share with you some of those ratios and some of those variables. So obviously to identify a specific harmonic pattern or advanced pattern formation, we need the Fibonacci retracement and extension tool. And we need to search for specific variables or specific criteria in order to project then those patterns. So let's start with my red lists. Actually, let's start with my green list. This is Apple, and so my bias in general for Apple, obviously it's a bullish bias, which doesn't mean the market will constantly trade in that direction. The market needs to retrace, as the most recent example here. So let me increase this into a 4 hours time frame, because most of them will be all on that specific time frame. So at this point, and because we are trading above these highs from October, from the actually 1 month ago, we are threatening those highs. I believe the market will retest the previous ones from September. So basically I will not be surprised to see Apple retesting these previous structure highs around 137, 140, and actually if the market trades at 140, it will trade above those previous highs. So we can point that at 137.94. So breaking above these levels, I believe the market will squeeze even higher. So what can happen as soon as the market approaches that level is kind of cup and handle. Eventually the market will feel some pressure as soon as it approaches these previous structure highs, and eventually a retracement. It will not be a surprise, and then the market may, if broken above, the market may squeeze above. So basically we have a crab pattern projected at 168 extension. So this golden Fibonacci extension, it's an extension from the very last swing low. So this entire retracement, an extension of this swing, and taking in consideration those Fibonacci, golden Fibonacci as a resistance, and then the 78.6 as a support, we can start to project that pattern at 159. So I will not be surprised to see 160 and then again a retracement. So if that pattern gets formed, we may expect later some pressure at that Fibonacci level, which may guide us, or which may guide Apple into a retracement or another one. As we can see, a retracement from this Fibonacci level and a 38% Fibonacci retracement as a default target, that will put the price trading again 137.94. So basically the 38% Fibonacci retracement level as a default target for that crab pattern will put the price retesting the previous structure highs and the previous structure resistance, which will turn into a support if that happens. So basically that crab pattern may offer a retest of this fractal resistance, and it may actually act as a support for more upside momentum later. Let's see how the market will, as I used to say, that let's see how the market will react to this pattern or to this projection, but obviously first of all we need to violate this 137.94, which I believe will happen sooner or later. Obviously we don't know if the market will fall from these highs. It can happen also a deeper retracement, but based on the ratios that we have, and since the market is now threatening the violation of these previous structure highs, we should not ignore the retest of the previous fractal resistance and eventually a violation above that fractal. If that happens, we already know where's the next pressure zone, which may offer another retracement, and then we also know this previous structure resistance may act as a support for more upside momentum. So we have both situations there. Obviously we have one potential buy setup above these resistance. If the market decides to form this cup and the handle, we can try to engage the market based on that specific pattern. But again, let's see how the market will react. First things first, step by step, and a retest of this previous resistance will not be a surprise for short, medium term, let's say. Actually, a short-term perspective, this is a 4 hours time frame chart. It may take some days to achieve those levels, but an immediate reaction, retest of that structure, of that fractal resistance will not be a surprise for April. Now, ADAV, we have the same ratios. Actually, the market has found some resistance at 78.6 from this very last swing low. Different structure here, so we have ADAV printing already a 3-wave structure with kind of one approach to the previous structure highs and then a fall into new lows. So we have a clear 3-wave structure. We can try to identify potential divergence between those lows, which we don't have. The market did not form divergence between these previous structure lows and the most recent one, which may also open or may also suggest new lows and those offering divergence. So let's see if the market will fall below this structure. Actually, I need the price to fall below this 440. So if the market starts to trade below, we should search for that divergence between the most recent lows. But again, taking into consideration the most recent criteria and variables in terms of Fibonacci levels, we can also project patterns above the previous structure highs. 168 extension, let's call this a minor or an internal bearish crab pattern. New highs 569. So basically we will search later for that potential retracement back to the 38% fib, and as we can see, that will put also the price retesting these previous structure highs. So that will not be a surprise, because that's how the market tends to react. The market will always try to retest the previous structure highs in some form. Okay, so basically we will wait for the formation of that crab pattern. We will pay attention to that pressure zone before moving upside, because the market will not, as I said before, the market will not move in a straight line. So the market needs to retrace at some point, eventually not so deep as the pattern may suggest. Sometimes the market will not offer you that kind of a reaction, but we can expect some pressure at those lows, at those highs. And what this means, it means those who are buying these, or those longs, should pay attention to this Fibonacci level as a potential, as a natural pressure Fibonacci level, which may offer then a retracement. Amazon, same picture here, 78.6. Actually, golden Fibonacci, the market has found some resistance between those Fibonacci levels, then it has found support at 78.6. So again, if the market trades above these highs at 33.65, that will open the door to form patterns above. So we have also, we can draw here kind of our major structure. So basically, if we need to wait for that to happen, a breakout of this structure. If that happens, we may see the price actually, again, the same methodology, the same concept. We wait for an extension of the very last swing low in this case, and then the projection of that swing will print the crab pattern. The same thing applies here. So if the price decides to trade those levels, 38.35, so then later the pattern will suggest the retracement back to 34.96, the 38% fib, and as we can see, nice convergence between previous structure resistance, which may turn into support and offer new opportunity to go long. And that will depend how the price will achieve those levels. Let's imagine a situation where the price will threat that Fibonacci level, will print a retracement, and then finally will fill that level and starts to fall. So basically we may try to search for a bullish pattern there. So that will depend how the market will achieve those levels. If it goes directly to those levels without a retracement, it will threat the completion point of that pattern and then new highs. Let's wait and see. But for now, taking into consideration the variables presented, we can start to project those patterns above. We don't know the outcome, but the objective here in my channel is not to provide you with a trading opportunity, is to share with you some of those concepts, the variables that we search for, in order to identify then later patterns above or below previous structure resistance or support levels. So very similar with Adobe and Apple, both projected crab patterns above. Activision, one of my favorite stocks, in fact, I shared this, I believe we will share that blog this week at Forex Analytix. Stay tuned. So we will publish a blog with some insights for 2021. So in one of the charts that I published, it's this one for Activision. So a clear bullish flag here. It has found some support between the 23 and 38% fib and the 200 moving average approaching from below. So nice bounce from these levels. So I believe we are facing the potential cup and handle formation. It's a very usual price behavior inside the stock market. So and it's reliable as any other pattern that you want to trade. So basically we have this cup shape and then the retracement. So I expect more upside momentum. So this is kind of a weekly time frame chart. We can see this as a weekly time frame chart. It may take some time to put the price there, and we can use kind of a clone of these. So basically the market, it may take some time. Let me try to. So we have a projection 46% above the recent price. So basically it may take a lot of time to rise into those levels again. So if we take the previous swing using the same percentage, the 46% rise in price, so basically we can so it took 500 or 600 days actually for the price to rise that same percentage. Previously, I'm trying to, no, I want this one. So it took nothing more than 600 days to rise that same proportional price move. So basically, it may take a lot of time, one entire year eventually, to achieve those levels. That will depend the strength of the next movement above. But this is my view for Activision, one of my favorites, and I believe it will keep trading in the same direction as always, as a bullish, sharing a bullish momentum with us. So basically, of course, this is pure speculation. I'm just trying to get you synced with this previous swing. So very similar momentum. So basically, I'm expecting that 46% rise, and if we project those below those 46%, it took a lot of time to rise, to produce that same magnitude of movement. No, I believe I get my point here. So it may take some time to achieve those levels, and that's what we call investment. So we invest in a stock in order to maximize our profits in a long-term perspective. So this is my 2 cents for Activision on a weekly time frame. So another stock that I enjoy, this is Cisco, and let's go again into the 4 hours time frame. So it may trade even higher. We can also let me just identify those highs here. Golden Fib as resistance, eventually the 88.6 as support, or the 78.6 as support. So Golden Fib 78.6, the same methodology I will apply here. The market can find some pressure above. I will search for the 127 for now as a potential pressure level for Cisco. This can print us a bearish Gartley pattern, kind of. Usually we wait for support at the Golden Fib and not the 78.6. When the price pushes to this Fibonacci retracement level, usually I will start to project patterns above the previous structure highs. But it can happen. The market can find some pressure at 127 below the previous structure highs, printing this Gartley pattern at 52.70. We have also a minor and eventual bearish shark pattern at 224. So before breaking above these previous structure highs, this previous fractal at 45, we have this bearish shark pattern right below those highs. So basically we are already trading the first Fibonacci pressure level, the golden Fibonacci extension level, the 168 extension. It seems the price did not found the expected pressure at that point. So we can let's say, if the price decides to ignore this golden fib, we can say, okay, if the market decides to approach that 224, it will put the price retesting these previous structure highs in fractal resistance. So we should not ignore that push above, and if the pattern gets formed, we should see then later a retracement back to the 50% fib. So that's what the shark pattern will suggest. The pattern will suggest another pullback to the 50% fib. Note that we are trading a bearish momentum in a 4 hours time frame chart. So only trading above 48.45 will change my bearish perspective for Cisco. So basically I'm waiting for that to happen, and I want to see how the price will react at 224% Fibonacci before breaking above. I believe the market, there's always room to trade above or below a fractal support or resistance level, but the point is we need validation, we need the price to confirm some of those violations, let's say, of the previous structure support or resistance level. So basically at this point, in taking into consideration the Fibonacci levels presented, I will not be surprised to see more upside momentum, but I will stay tuned to these 47.36 and then later more upside momentum. As I shared before, the shark pattern will trade the 50% fib, and it will print us, and it may print us also a bullish 5-0 sequence, so which may offer another opportunity to go long after completing the sequence. So we wait for the bearish shark. The shark pattern tends to offer a retracement to the 50% fib. If that happens, that may offer a nice opportunity to or at least a 5-0 sequence, an opportunity to go long for those who are searching for that opportunity. As I said before, we can expect later, if the price breaks above, we can expect some pressure at this golden Fibonacci level. Note that we have perfect confluence or perfect convergence between the 127 and the 78.6. So I will not be surprised to see that pressure zone and then again the market reacting to that pressure level. But ultimately we can see projection. Actually, we can project the patterns. We can project some patterns above. So, and the one that I want to share with you, it's an extension to the golden Fibonacci level, an extension to the 168 extension. So to the 168 Fibonacci level. So that being said, I will not be again step by step, but I will not be surprised to see a violation of this previous structure high, the previous fractal resistance levels, 58.25, and then if that happens, we may see a squeeze above for Cisco 74.28. This is the crab pattern as projected before for Adobe and Active and Apple and Amazon. So the crab pattern may offer a retracement later, 38% fib, and again, as you can see, golden Fibonacci extension, 38% Fibonacci as default target, previous structure resistance turned into a support. If that happens, we may see a retest of these previous structure highs. Let's see if that is the case. So again, I have a bullish bias for Cisco, but a step-by-step process not before breaking above 48.45, and then the previous structure highs, the 58.25. So now Disney, the same pattern projected at 198, 200, let's say. The retracement should be expected once the price achieves those levels or approaches that Fibonacci level, which may put the price trading again 38% fib. Another example where the market will retest the previous structure highs. If that happens, if the price finds resistance at 198 or at the 200, that may offer again a retracement back to the 38% Fibonacci retracement level, which will put the price retesting the previous fractal resistance. Electronic arts, quite the same. Let me go into a lower time frame, I believe. Actually, I can stay there. So the EA Sports, we have convergence between two different patterns. One of them 148.94, and then the other one 151. So we have that range where the market may find some pressure. We are now abandoning the 78.6. Obviously, we need to wait for the violation of the previous structure highs before starting to project those patterns. But note this level may act as a false breakout of the previous structure high. So if the market decides to find some resistance right above the previous structure highs and forming those shark patterns projected above, we may see a reaction again, 38% fib, or actually the 50% Fibonacci retracement. That will be the suggestion for electronic arts if the price decides to form those shark patterns right above the previous structure high. So we just need the price to threat the violation of this previous structure, a false breakout above, and if the price finds resistance, we may see the price then later starting to retrace back to the 50% Fibonacci retracement level. Okay, 135, the 38, 130, the 50% Fib. Ford, of course, I'm just sharing some of the patterns. I don't trade all of those stocks. Just a few, just a couple of them. The Activision, it's one of them. Not the case for Ford. Not my favorite stocks. But we are also facing one very, at least in my opinion, it can be interesting to see this. So we have this bearish descending channel, or this bearish descending trend line, and we are now approaching that trend line and the bearish pattern completion point. So it's the so-called M shape or W shape price behavior, and the ratios presented may also suggest the formation of that pattern. So basically we have resistance between the 50% and 50 in the golden Fibonacci level as resistance. Then the market finds support at the 50% Fib, or between the 38 and 50% Fibonacci retracement as support level. So in taking into consideration those ratios, there's only one pattern that we can project below these previous structural lows, which is the bearish pattern at 88% Fibonacci retracement, 981, which may offer then a retracement back to 7.58, so the 38% Fib. So let's see how that will happen. Of course, breaking above this descending trend line, that may force the price to squeeze higher, but let's observe how the market will react also for that one. Goldman Sachs, bearish sharp pattern at the previous structure highs, projected at 251, previous highs at 250. Default target for that pattern, 50% Fib. Before moving higher, we may see a retracement for Goldman Sachs. I will not be surprised with that, and then a clear violation of these previous structure highs may offer more upside momentum. But the next pressure zone, we at least in my opinion, in terms of Fibonacci criteria and harmonic patterns, we never know, as I said before, the outcome of those events, but we know where those patterns will invalidate, and we know the type of reaction we may expect. So if we expect a retracement back to the 50% Fib, we can use that as our reward, or our initial reward, and we can use that initial reward to apply a simple strategy. I never enter the market to lose more than what I expect to win. So if I need to enter the market using a one-to-one risk-reward approach, I will take that in consideration, and I will put my stops, I will set my stops according to that same proportion, but adjusting my position size always. I always adjust my position size in order to not lose more than what I decided initially in terms of risk. If I want to lose 1% of my capital in that trade, I need to adjust my position size, my volume, my initial position size, in order to say if I lose that trade, I will not lose more than 1% of my capital, or 2 or 3% of my capital, whatever you decide to define as a risk for that setup specifically. So Goldman Sachs also approaching the previous structure highs. It may offer some pressure before breaking higher. Juniper, also another one that I'm searching for with a different perspective here. Let me go into a 4 hours time frame. So I see this as a potential and not confirmed yet inverted edge and shoulders. The inverted edge and shoulders will only validate above 2290, so we need to see a clear breakout of these structure highs. So if the market decides to trade above, that will confirm the pattern, and we may see the price then searching for the default target for that pattern, the inverted edge and shoulders 25.93. If that happens, we may see some pressure then later a few points above the 224% Fibonacci 27.10. That will be a bearish shark pattern without ignoring obviously the golden Fibonacci extension level. Actually, let me point that also for you. So the golden Fibonacci level, this is a Fibonacci extension from this very last swing low, as some of you are already aware. So an extension to the golden Fibonacci of this swing may offer some pressure, 25.01, and we have then the 27.10 right above the previous structure highs. Again, it may act as a false breakout above, which may also suggest a retracement. So if that pattern ends up being formed above, we may expect then the retracement again for Juniper. Not what I'm expecting. I truly believe if the market decides to break above these highs, it may offer more upside momentum, but well, the Fibonacci level it's there, so it's the patterns are there. We don't know how the market will behave, but that's what it is. The pattern is projected there. I believe even if the price decides to retrace, eventually it will be a very limited retracement if that happens. But well, I think the market has room to trade even higher for the Juniper. So that inverted edge and shoulders may trigger more upside momentum for that one. JP Morgan, also another one approaching a bearish bat pattern completion point. Again, we don't know if the pattern will form. We don't know the outcome if that happens. What we know is what we see, and the criteria may suggest the formation of the bearish bat pattern at 133. So if that happens, we may see a retracement back to the 38% Fib, and we have also this kind of this gap between 110 and 105. So basically we have the default targets for that bearish bat pattern, also suggesting the feel of that gap printed below for JP Morgan, obviously trading above the previous structure highs, not that one, let me correct this one, the previous higher highs. 141.09 will may trigger more upside momentum for JP Morgan, of course. This is MasterCard, another one that may act as an inverted edge and shoulders. Let me also clarify here something. Usually we tend to search for those events at the bottom of the structure, at the bottom, or let's say at the previous structure support levels. We can try to identify kind of an inverted edge and shoulders if the price decides to approach the previous structure lows. We can try to identify one hedge and shoulders as soon as the price approaches a monthly resistance, as an example. We tend to not consider the inverted edge and shoulders as a trend continuation event. So usually we tend to search for those as a reversal behavior, but it's not the first time, it will not be the last one. Inverted edge and shoulders, and let's see if the market, it will be confirmed only above 355 or 356. So basically we still need validation. Only the price will confirm that. So that this price action for me says, okay, if the price decides to break above, that will confirm the potential inverted edge and shoulders, and default projections for that pattern also suggesting more upside momentum, and for 427, 200% Fibonacci extension level for MasterCard. Netflix, inside is a shining channel, as we can see. It's a lower time frame structure there. We have also the golden Fibonacci extension level at 552, and we have the 224% Fibonacci potential false violation of the previous structure highs at 87. So basically we wait for a reaction at this golden Fibonacci level. If that happens, it may act also as an eventual right shoulder if the market decides to feel some pressure at these levels below the previous structure highs. Of course, 224% Fibonacci extension, false violation of the structure above, that may also offer a retracement, even if limited, and then we may see more upside. So, but again, what I want to point here is the potential heads and shoulders, which may point below, if trading below 463. So we still need that head and shoulders to confirm and to get validated below this previous structure fractal support. If that happens, that the market may sink into this default projection, but without ignoring also those possibilities above, or the formation of the right shoulder. We can actually, if the market decides to violate this previous structure support without achieving those levels, the market, I will say that I will consider this as a right shoulder already formed. But let's see how the market will react to this false breakout below. Let's see how the market will react to this false breakout below, because we are also threatening the previous structure resistance. So if the market decides to trade above this level, I always project the golden Fibonacci of this swing low. So the very last swing low projected above with an extension to the golden Fib, and we can expect later the retracement. Okay, that's the point for the shark pattern. So of course, as we can see, I also draw the potential cup here, because if the market decides to approach these previous structure highs and eventually breaking above and then retrace, we can consider this as a potential cup. The market needs to form the handle later, so we still need the price to approach the previous structure highs, and then a bullish flag should be printed with the price forming the handle, and that will offer an opportunity to trade higher with the Netflix. So this is Philip Morris, also approaching a crab pattern at 86.60, actually just a few points above the most recent highs. That pattern may suggest a retracement back to 79.88. Let's see how the market will react also once the price touches those levels. Another projection that we can use is the very last swing low. So this very last swing low projected at 200% Fibonacci retracement level, not at 161, but at 200% Fib. So we have we have a range where I will not be surprised to see Philip Morris reacting. So if the market decides to approach those previous structure highs, also 200% Fibonacci level, so I will see these like this. So actually I don't need this one. I will project this as a 5-0 sequence later. If the market decides to react this, I'm not shorting the market here. This is not a pattern to get short. This is a pattern if the market decides to fill that criteria and then later starts to retrace, and let's use this retracement already here, push it above, or adjusted to that Fibonacci level. So if the market decides to be pushed to the 50% Fibonacci later, so I need the price trading higher, I need the price to be pushed above that completion point for that crab pattern. So that being said, the pattern may fail, that crab pattern may fail in order to achieve those levels, of course. But if that happens, and if the market decides to pull back again to the 50% fib, in this case will converge with that target for the crab pattern, just pure coincidence. But if that happens, that will complete also the bullish 5-0 sequence. So this will be a price to buy and not to sell this 200 moving average, this 200 Fibonacci level, I'm sorry. So again, this will not be a sequence to sell the market. I will not suggest a sell there, but if the market fills that criteria, the 50% Fibonacci retracement, that may offer an opportunity later to go up again. So the crab pattern needs to respect the golden fib. It doesn't need to we don't need to provide a lot of room above that completion point. Actually, usually the crab pattern tends to react right as soon as the market touches that level. The market tends to react immediately. That's the expectation that we have for the crab pattern. So that being said, you just need a few points above as a stop for that specific pattern. And we expect, as I said before, the 38% fib as a default target, projected at 79.88. So we expect that retracement at some point for Philip Morris. PayPal also approaching the crab pattern at 241.35. So this is the same pattern that I'm showing you constantly. So basically the same crab pattern. If that happens, we may see again a retracement back to the 38, previous structure highs, previous monthly fractal resistance, retested as potential support. So this is Seagate technology. Obviously this is the eventual bearish alt bat pattern projected at 67.52, and we have the crab pattern at 79.76. If the bat pattern fails you, just grab it, and I can show you all those levels. If the bat pattern fails you, just grab it, because the market usually, when the price fails that bearish bat pattern completion point, it will squeeze even higher. So basically what is this 113% Fibonacci extension doing here? This may act as a false breakout above. So we have the previous structure highs at 64.12. We are already trading above, so we expect the market to squeeze higher. So we already violated this previous structure high, so we expect the market to keep forming this ascending structure and sharing that bullish momentum. So we can create that expectation, but the market may also fail that expectation. And the 113% Fibonacci extension, I use it to identify, let's say, the limit, to identify the potential false breakout above. I can use also the 127, let's say the range between the 113, 127, to search for that pullback. If the market decides to start to retrace from these levels, obviously that may offer later, and we need the price then later to confirm that with a violation of the support. But it may happen, it may act as a false breakout of the previous structure highs if the price decides to trade even lower from here. So only a violation of the support will confirm this as a false breakout above, because if the market decides to print new highs and retrace, who grant us or who assure us that the market will not trade even higher later? We don't know that. So if the market decides to confirm that as a false breakout above, we need to see the price trading below the previous structural lows. That will confirm a false breakout above. Until there, we may see the price finding some resistance, retracing, and then more upside momentum. So the 113% Fibonacci extension as an alt-bat pattern completion point should be used also, in my opinion, as a potential indication for a false breakout above or below the previous structural resistance or support levels, respectively. So at this point, we are approaching the 113% Fib, but again, I see momentum, and I will not be surprised to see Seagate also targeting or pointing that the Fibonacci extension level 79.76 bearish crab pattern. This is Twitter. Also, in this case, I'm searching for the 200% Fibonacci extension. The reason why I'm searching for that extension is because the price has found support quite very close to the golden Fibonacci extension, basically the 150% Fibonacci extension being reached here as a support. So when that happens, I tend to search then if the price decides to trade above this resistance. I will search for the 200% Fib, and then I will project kind of a retracement from that Fibonacci level, and this may offer me an opportunity to go long. As I said before, we can try to search for usually I don't short these markets, but we can try to search for that opportunity to go short if the market decides to feel some pressure there. But I always suggest to wait. I prefer to wait for, let's say, if the market decides to pull back again, searching for that 200 moving average approaching from below, 38% Fib, 50% Fibonacci retracement. I will search for that as an opportunity to go long again and a retest of this high. So if the market finds resistance at 59.30, and then if the market decides to pull back, I may be able to join the market to get involved and to retest these previous structure highs, which may also allows me to manage my position and break even my trade and try to maximize my profits, trying to ride that or trying to participate that bullish momentum. So this completes my Twitter completes my green list, the ones that I'm expecting more upside momentum, even if limited. We have already I shared those patterns with you. So let's go into some of the stocks that I have on my red list. This is AMD. We are already trading that golden Fibonacci extension, so I do expect AMD to pull back a little bit from these highs, and if that happens, I will wait for that bounce and note that we may be facing also the potential head and shoulders here. So nothing is granted, of course. This is pure speculation, but we are now facing the golden Fibonacci extension, any type of a retracement, and if the price finds support very close to these previous structural lows and basically very close to the 38% Fibonacci retracement level, it may act as a next support zone, so that will put the price reinforcing that support level, that next zone, and it may form or it may help the formation, let's say, of these head and shoulders. Okay, so for now we have kind of a bearish crab pattern. Actually, we have kind of a deep crab pattern printed here. So I'm still waiting for a retracement for AMD. Bank of America, another one facing the golden Fibonacci extension of this very last swing low. So we have this swing low, a retracement, a retest of the lows without trading below the previous ones, and we are now facing the golden Fibonacci and previous structure highs. So I will not be surprised to see a limited, even if limited, both AMD and Bank of America, even if limited, retracement to the 38% fib. And as we can see, we have also nice gap here for Bank of America between the 50% and the golden Fibonacci level. So I will not be surprised to see Bank of America searching for that 200 moving average approaching from above or from below, and eventually a reinforcement of one potential trend line support also approaching from below. General Motors, another one trading the 113% fib. As we can see, the price has already started to react a violation of the previous structure highs. In this case, we have also the price threatening the higher highs at 46.74, and the market decides to start to retrace. So basically at this point, and taking into consideration the ratios and the variables and the pattern itself, we can expect a retracement back to the 38% fib, searching for the 200 moving average, now pointing at 34.1. So I will not be surprised to see General Motors also providing some more descending momentum. Another one trading already that completion point, the 113% fib. Let me also put here the other levels above, because we never know if the market will respect this 113% fib, and if that fails, if the market fails a retracement, so basically 113% fib, 62.65, we can wait for a retracement back to 60.14, but if that fails, we may see the price squeezing even higher to 65.85. Golden Fibonacci extension of this very last swing low. Let's see how the market will react from here. For now, it looks like it has felt some pressure. We don't know if it will be enough to produce these retracements. We know where the pattern invalidates, and we also know we have a crab pattern projected above. So I prefer, in these situations, I prefer to wait for, it may be useful to wait for the crab pattern, because it will also offer you a very friendly risk-reward approach instead of threatening these previous structure highs. But it's just one opinion. Sometimes I will prefer to engage the market. That will depend on the previous structure. But sometimes I prefer to try. Actually, this is Oracle. Oracle. Yeah, eventually this is one of the situations where if I want to try to get involved in a retracement, eventually this is one of the situations where I will prefer to get involved at these previous historical highs. I believe. I need to confirm that, but I think yes, it is not one of the stocks that I used to follow, but most of them are already approaching historical highs. So basically, this is just another one. We have new highs already, so I will not be surprised to see a retracement, as I said before, without ignoring obviously the momentum, which is still bullish. So let's see how the market will react. The same variables here. We have these retracements between the 50% and 61.8 as resistance. Then we have a retest of the lows, 78.88%, 88.6% Fibonacci as support without breaking above the lows. As soon as the market trades above this previous structure resistance, we start to project patterns above. 113 is now, it may now act as a false breakout. If that fails, if the market fails these retracements, we may see a squeeze to 65.86 golden Fibonacci extension. So this is Qualcomm, not again. I'm just sharing with you this pattern because we have two different we have two gaps here that I will not be surprised to be filled. As we can see, one of them right below, and the most recent one right here. So this one may be filled by one inverted edge and shoulders, and the target projected at 125. So that's the only thing that I can see here: the reinforcement of the next zone, the potential left shoulder, head, and eventually the right shoulder, and then we may see the price, if the price trades below these previous structural lows, below 141.13. I believe if the market decides to retest that level as a support at some point, it may act as resistance, and we may see the price trading even lower. And to finish, Texas Instruments, another one that I used to follow, also trading the golden Fibonacci extension level 162.20. We are inside this channel, this ascending channel. I believe there's room for obviously there's always room for more upside momentum, but taking into consideration again the ratios and the variables presented, I will not be surprised to see a retracement to 138.92, 38% fib. Nice strong bullish momentum. We are talking about potential reversal behaviors and counter trend patterns. So the good thing about those patterns is we know where the patterns usually finds support. In this case, finds support as targets. We know the target, the default target for those patterns, and we know where the pattern will invalidate, which allows us to create a very interesting and friendly, above all, a friendly risk-reward approach to trade. So let's see. I hope you enjoyed this session for today. Those crab patterns for the stock market, and a few potential cup and handles also, but a few inverted edge and shoulders that I shared with you. So this is kind of an introduction to the crab pattern. As you can see, most of the projections are for the bearish crab pattern projected at the golden Fibonacci extension level. So let's see how the market will react. We have also a nice reaction here. As we can see, we have the golden Fibonacci extension level offering resistance, not enough to produce the default retracement or the expected retracement, but we still trading. It's still possible to see that happen as soon as the market. I believe, in my point of view, if the price decides to trade below that lower or minor or lower degree ascending trend line connecting those most recent lows, I believe the market may start to fall from those levels. So this is kind of an introduction to the crab pattern. I hope you enjoyed this video, and well, stay well, stay safe. All the best for you, as always, for you and for your families, and see you next time.